Hey everybody, it's Red Ben Trader. It is Sunday, May 2nd. As promised, I wanted to review the trade I took tonight on NQ. You can see this is the 20-tick Renko chart, and the studies I have on here are a combination of the TradeNPerform algo along with some of my own studies. This is what I use to help me find precise entries and to also do some analysis on multiple time frames, basically, but in a microcosm of the candlestick chart. So I see things on here uh, related to order flow. The algo is basically alerting me to changes on the footprint, which I'm not going to go into right now because it's complicated. But the point is all of the color bars and the dots and the stars and the triangles tell me different things that I need to, and there's patterns that I need to be watching for. The other thing that we need to think about, though, in addition to the patterns, is when to follow bullish patterns and when to look for bearish patterns. Because a lot of times you'll have bullish patterns like this here, the blue speed bar here coming in off the low can sometimes be a sign of strength. But in this case, we would not be looking for blue speed bars to buy. We would be looking for sells here because we're in bearish momentum. So you can see we're coming down like this. So we're looking for bearish candles with signals like these arrows and that, like the yellow speed bars, to give us some trades. Now, this all changes once you get over the wave to the low. And this is something that Simon teaches, my coach and the TradeNPerform leader of the team. So these down here are the Weiss waves, which is basically accumulating volume. And the green ones are bullish and the gray ones are bearish. So when I say wave to the low, what I'm talking about is if you look at these five bars, they coincide with these 1, 2, 3, 4, 5 down bars here. And this is the low of the session here at like 12.805, let's say. So what we can do is we can go to the top of the wave to the low, which is marked with this red line here. And that is the exact tick where the rotation began that came down into the low. So the reason this is important is when you're below the wave to the low, we don't really want to be taking um, bullish trades. So in this case, there isn't a trade setup other than maybe off the edge, but that's pretty dangerous since you don't have a location or any other reason to be buying here. We're not really looking for getting the low of the day. That's not the high odds trades we're interested in. We're interested in trades that actually work 70, 75, 80% of the time. And so to get that kind of win rate, we have to think about structure of the market and when certain trades will work and when they're less likely to work. So to get bullish trades to work, the first thing we would need to do generally is to get over the top of the wave to the low, right? So once we trade back up over 12.839.75, we can begin to look for uh, buys, bullish trades. And those trade setups could happen anywhere. The ideal place for a trade setup would be right off of a retest of that level. Now, I made a mistake here that I didn't realize until I started reviewing this, and that is that I didn't mark this wave to the low early enough. I was just not paying attention. I was getting home from work. I work on the weekends, so I can trade 3 days a week during the New York session. And I basically missed the wave to the low and didn't mark it until after this retest because this retest is textbook, where you have these triangles and the arrows. Basically, think about them as aggressive traders. So here we have an aggressive trader trading bearish into the wave to the low. So he's expecting a push into a new low of day. Well, that doesn't happen, which isn't a huge surprise since we've already traded above the wave to the low. You can see what happened up here is it spiked once it got over the wave to the low, but then immediately fell again right through VWAP, which is this. And then this shaded area is just another strategy I'm using to find those, but that I'm not going to go into today. But what happens here is we actually dip underneath the voodoo range level that I shared yesterday, and this is going to be good all week long. So 12.838.50 is a significant level that the mean reversion algos are likely watching based on the range that they're responding in general. And what we see here is that price gets below it but we get some excess down here, which is what that green dot says. And then the point of control of this 20 tick bar is actually, see how it is above the voodoo range? And so are all of these. See how all of these dashes that coincide with where this yellow moving line hits inside the bar? That's the point of control. That's where most of the volume is, inside that range. So when the market came down towards the wave to the low, and towards the voodoo range level, and it's always nice when you've got two different systems telling you to watch the same general area, but the volume of the move never got below it. And when it did sneak below the wave to the low, it did not get out of the voodoo range level. And when price got into the voodoo range level, it put in excess and immediately closed back bullish. So right here on this triangle, this is a good place to be buying. Like I said, I did not see this. This is a great, what we call a triangle trap setup, where we've got a white triangle that gets traded behind, and then aggressive buyers come back in. It's better if you have a star here, or a color bar, but the triangle up occurring here is also a good sign. It didn't set up quite how I like it, so I didn't take it, but structurally it's perfect. It just didn't give me the sign that I wanted. Had I been paying attention to the wave to the low here, and I would have seen this, I would have made an exception and taken a small size trade, basically just on structure, because you could put your stop literally right here, or I could anyway. That's my rules. I would then get in here, and as soon as this printed, this bar here, I can then move my stop down underneath here, and then as it goes higher, I can actually trail it. So that would have been a great trade to take. I just missed it. It did continue higher, but the fact that I missed it, I didn't let that get me down, but I did start to get a little bit anxious to find a trade, because when you're watching, just for me in general, if I'm watching something work that I had set up but didn't take, I always get a little bit frustrated. So I initially was looking for a long, and saw an opportunity instead to take a short. And so that short was, let's see, this way. That one's marked for a different reason. We're going to get that in a minute. So the short that I took, this was all just chop. I don't really want to be participating in this at all. This is where I started watching the market a little more closely, was here around 1930 Central. So my short that I took was in here on this drop. Now, the problem with this short is that the expectancy is actually not that great, because we're trading into the wave to the low, and we've clearly traded above it and failed to trade below it. So I personally don't like the fact that I took the short, but I'm not going to pretend like I don't make mistakes. I do. Thankfully, it worked, and that's kind of how things turn out sometimes. Sometimes you take a trade that's not in the ideal position, but if it's a valid trade setup that works a lot, sometimes you kind of get lucky, basically, and it worked out for me and got my risk off. But what I'm basically looking at is the fact that we had a pivot here, and then this orange bar followed by a triangle. So as this triangle is printing, I can get short here because I'm breaking down underneath this power bar. Now, this only works if you're bearish. If you think this is balance, which I should have, I should not be taking breakout trades. That's just straight up of it. What I should have done is wait for a triangle with an arrow in it, which would have identified bearish momentum, and that would have been a better short. There was one I can show you back here, right there. So this is the arrow I'm talking about. So this triangle bar also has an arrow, and that is indicating to me that the downwave has some momentum in it, and so it's more likely to continue immediately without having to retrace first. So it's basically already done the retracement, and it's found a pivot. Now what's cool is this same area here can act as a pivot in the future if you get something like a star. So this is another good short that I just totally missed. And like that's just, when you have so many signals and so many setups, unfortunately you don't get everything. But thankfully, when you pick an area to trade, like in this case, I wanted to find a long around this 830, 850 area. I knew I was looking there, and I was ready for it when it set up. So like I said, I did take the short. I got my risk off at like 40. Here, let me check I've actually got this here. I got my risk off at 43. So I knew this wasn't working right here. So when I got it on the breakdown, I did not like that this bar was purple. That's telling me that there's basically um, that the price is dropping, but it's dropping because people are pulling their buy orders primarily. So when the market drops this way, it's a sign that the aggressive traders were active earlier, and the buyers are currently scared. But if they start absorbing, we can get a pretty big bounce. So you don't really want to be shorting on purple bars unless you have a really good reason to. And here I'm taking an aggressive breakdown trade, which is not the kind of place to take a purple bar. So once it closed purple, like I said, I anticipated the entry and got in a little bit early um, by mistake, as an error. I shouldn't say by mistake. It was conscious, but I made a trading error, right? A decision error, thinking I could slip through this low, and I was targeting lower. Uh, but like I said, I was not focused on this wave to the low at the time. I had the line there, but I had forgotten what it meant. And so I was thinking of it as a target, but it wasn't a target. It was for a short. It was a location to look for a long. And so as I got into the trade and it turned purple, and we started to come in here and we got another purple bar right away, I know that I should be basically exiting the trade. So once I hit my first take profit target, right about here, I did exit some of the trade and then exit the rest of it on this bar, or it might have been this one, as I flipped bullish. So the reason why I flipped bullish, first of all, structurally, you can see that we traded near the wave, the high of the wave to the low, couldn't put any volume underneath it, couldn't even trade price underneath it, and once again got excess down there. So that green dot, I've added that study to tell me there's excess underneath here, but yet they responded and closed the bar way up here. So you can see, for instance, in this bar, it kind of did the same thing, but there's no dot there. It's not quite far enough down underneath this one, but this one does get far enough down that it tells me that there's some excess on like a very micro time frame. And so I can watch that level not only for a sign that we might be bouncing, but also for a target to get a breakdown. You can see here when you break down underneath them with triangles, it tends to create a breakout opportunity. So it's kind of a cool way to trade those as well when you know the momentum. But anyway, what I was doing here is I saw the absorption here. So if you see that point of control goes up from the bearish bar to the bullish bar, I've got the study added to paint this hunter green color, and that's to alert me that there's some absorption of sell orders at the lows. I've also got this little dash right here. See this like bluish green dash? That's a study that Ed shared with me, which is also pretty neat. He's got that available for free. And that's basically telling me that there are that sellers there are actually exhausted. And what I love doing with these exhaustion lines is I wait for them to trade beyond it and then close above it, just like this. So they got exhausted, the sellers. They tried to push lower, put in excess, and came back up. So right away, that is clearly a sign of some aggression. But you can see these green bars are not always buys, right? This one had some absorption out of a purple bar, which is usually a really good thing. Or I shouldn't say a good thing, a very bullish move. But in this case, they failed to continue and then absorbed all the buyers and made another, basically, what's it called? It broke down one time further. So if you look to the left, where I've got this arrow, you'll see that we have another absorption bar. And this is a interesting phenomenon I've noticed and have been watching closely lately. And what I've found is that when you trade under these, like this, and you come back up through it again, so if we would break above this little pivot here, or this little pivot here, because there was absorption here of sell orders, what you tend to get is a response. Now, in this case, you can see we couldn't quite get underneath it before we got a response. And that's probably part of the reason that this one didn't go anywhere. It didn't trap any sellers underneath that previous pivot, right? It just tried to go as a higher low, like a double bottom. And those just don't work that often. You have to be in a really great location, have buyers from higher time frames waiting to buy it there, basically. Usually that's not how it works. Usually what happens is sellers get a little bit too aggressive down here. They push, expecting further, and just get absorbed. There's buyers waiting underneath a pivot, maybe just looking for a mean reversion trade back up to VWAP, for instance. That would be a very common trade that even the algos are doing. The mean reversion algos are probably trading that regularly. So what I'm looking at here is that we got under this absorption. We put in new absorption right away and then traded with an aggressive buyer here. So I actually added to the trade once I saw that. And the other thing that got my attention here was you see this red bar here. That is sellers on hitting the bid at that price. So that is delta by price. So this price here at 12,857.50 perhaps, or 57.75, there were many more, 92 more contracts traded at the bid versus at the ask. And so usually most of those probably happened in here, right, with these aggressive sellers, and possibly here where you got after the absorption and with the breakdown. That would be a very normal place to see a big push on the bid because everyone's stop, what that they put where, right here, is getting hit. But what's interesting is that once you trade over that level, if it holds and sellers do not defend it, but instead buyers hold it and they're unable to come back and break through it, it's actually a sign that there's some serious aggression there, because normally those are defended. And I can show you a lot of examples of those, but let's just for now just assume that they should get defended when they're tested through. Generally, you get a retest of these levels to see if sellers or buyers hold it. Because if you think about it, there's 92 more sellers there than buyers, aggressive sellers, I should say, than aggressive buyers. There's a buyer and seller for every trade, but in this case, there's 92 more aggressive sellers and 92 more passive buyers. Yet when the buyers broke through this on a pink bar, nonetheless, which basically means with no aggression, the sellers never even tried to retake it. So, like I said, I was out of my short pretty quick and then flipped bullish and added here once this bar was printed. And I noticed that we weren't immediately coming back. It's kind of hard to see here. Let me take these lines out because then you can actually see it. I've got them there to remind me where I got long, but the numbers get in the way. So again, I got short here. It worked, but as for a scalp, it was dangerous. Got out of my short, some of it, half of it here, the rest of it trailed out, got long, and then added long here, which might look a little bit dangerous because you're already, you're basically looking for a V reversal, which is not very common. But the reason I can do it is that I've got structural support, I've got location with my voodoo range level and the wave to the low, and we've been trading above that. And then I've also got a target that's quite a bit higher, and so my risk to reward is still quite good. What's great is that once we've printed this triangle here, and then we print another candle when I got my second ad, I can actually put my stop down here now. I don't have to put it at the bottom. I can roll it up a little bit. And as long as they don't close a candle under, or bar, I should say, underneath this bar here, the trade can continue higher. Obviously, it can continue higher even if they do close down here. But generally, those pivots will not be explosive. So if I'm looking for a V bottom off of a retest of the wave to the low, I should not expect a big retracement here. So I can trail my stop to here. It makes it less scary, basically, less risky. And I can take a little bit higher size. And I was aware that I would probably have to hold through some consolidation. And I didn't know how long that would take. But the nice thing is this actually began to clearly work quite quickly. You can see here we got a little pivot and then immediately another triangle, which was actually an opportunity to add. But that one I did not add at. I should have. I was actually busy posting on Twitter about making like a good 50-point move with a couple contracts and missed it. So that is on me. We then make an absorption pivot here. This is beautiful. The orange followed immediately by a green that then is followed by a triangle is a sign of serious buyer aggression. When this happens, see how this is the exact opposite, right? Green followed by orange followed by triangle. Boom. Green followed by orange followed by triangle. So again, if I wanted to, I could have bought in this area, but I did not feel comfortable with the fact that we had resistance up here, and I thought we might chop for a while. So I did not buy more there. And let's see, my first exit was around here. Let me just double check where this was. My first exit was 902. Oh, right there. Yeah, cool. Okay, so 902 was my first exit. Taking some profits here because all of a sudden I don't see once this triangle's in, and then this second after the triangle's in, I can put my stop down here, right? Very comfortably. I've gotten this little pivot. I've gotten triangle. I know that if the market trades underneath this level, that it's probably going to retrace further. So I've already basically locked in all those gains. But once we start trading higher into resistance and pull back with absorption here, this orange candle, I took some profits because I felt that we may be headed back here and we could just be balancing with a lower high and then a higher low, which is what I was thinking. Especially with all these pink bars down here that never got tested. See how we never got back here? Usually these pink bars get retested, and then we did it again. Pink bars, no retest. So I was expecting VWAP to get tested here and took some profits. Now what's interesting is I didn't take the whole thing off, and it actually set up again. This is a triangle trap, so we got behind a white triangle and printed a power bar here. This is actually another entry I could have taken, and then we went higher. So it's one of those trades where if you do it right and you can be patient, it can pay you really well. Let's see, my additional exits were, make sure I get this to you guys right, just pulling it up. 35. Okay, so I was out of half of my position. I marked it 35.75 right here. And when I took it was this star bar here. And the reason is because this, if you think about it, this star here, let me mark it here. The low of it is here, right? And so what we did is we ripped all the way up from the wave to the low, all the way down here at 12,839. We ripped all the way up here with a little pivot, but not really much of a retest. And then put in a star here, which is usually a sign of aggression. Basically, some really heavy buyers came in here and pushed it higher. And the location of this doesn't make a lot of sense. If you look to the left, we're over resistance. These look like chasers to me when all you see is this, and you've got heavy aggressive buyers coming in above that. It's also above the 3 times VWAP line, which is the orange line here. It's not a sell signal, but it's certainly a reason to get paid if you've been holding for that long. So I felt comfortable taking half off here, and did. And then it did pull back a little bit, and then actually we just went higher again. A little pivot, came right back. See how this pink bar got traded under? But as soon as we put a volume point of control bar under the line under here, we immediately bounce. This is really bullish. It's symmetry basically is what it is. If you look at a 1 minute chart, this is a symmetrical pullback, and those are really powerful if you can learn to identify them. So when you get those, you generally get follow through, which in this case is a breakout again. Right, so it goes higher. Let's see, the rest I think I held, hold on, yeah, so I decided at this point that we may be headed for 12,300 plus. So I put a stop in, but did not at where was it? 85, 980. That can't be right. I'm switching this around. So it's here. So this one is where I took my last. It is 47. So like it would have been on this drop here. So it traded higher. They absorbed the buying at the highs, right? This is the high a day. You see the orange candle, which the orange bar, which means we absorbed, followed by a triangle. Could have been a sell. I just wasn't bull. I wasn't bearish, and we're above the 3x VWAP line, so I wouldn't really be selling it anyway because that would be my target to come back to. We trade under it. They try to save it with a speed bar, and they immediately stuff it with a yellow star. When I see that, I'm out. It doesn't mean it can't go higher, right? But all of a sudden, I've got successive aggressive sellers responding to aggressive buying. Even if it does go to my target, the fact that I know that some sort of consolidation or pullback is probably coming here is a good, in my opinion, a good time to go ahead and exit the trade. So what ends up happening is it does pull back to here, which is interesting because this aligns exactly with that aggressive buyer. And this happens all the time, you guys. This is just the way the markets work. The pivot here that we talked about before that traded under and immediately bounced. It trades to test it one more time and bounces again, right? And now this is interesting. This is where a lot of people, so if you put your stop like here and you got stopped out and then you see them come back with aggression, a lot of people make the mistake of buying this. Don't do that. I highly recommend when you see aggressive action on the back side of a move, right? And not on the front side when you're still climbing. Don't take aggressive trades on the backside expecting a high to get broken. In my opinion, I could take this, but my target would be here, back to this absorption, which would have hit. See that? But if I'm targeting up here and I'm buying down here, or even worse here, it's just not going to work often enough, you guys. There's too many trapped buyers up here, and they're going to act as new sellers. Now they're not hurting yet, right? They're just slightly trapped. When it really gets to be a bad idea to buy is once it gets under this structure. See how this kind of goes up, down, up, down, up, down, and this becomes a very important line here. When this breaks, you do not want to be a buyer. Okay, right there. Don't buy this because this structure just broke. If it was just one of these, it's fine, right? When this one breaks and immediately comes back, I like that for a scalp. I like it. Once you have structure developed and you trade under the structure, we should not be looking for buys. If anything, we should be selling when that buy falls down, right? So I'm not buying this personally. I don't like buying those. Even if it continues, most of the time it rolls over. So I'll just wait until those buyers run out of energy, which can be a long time. Sometimes you gotta be patient. Sometimes they just don't. You want to be using mean reversion in balance and momentum trading in trends. And once you've traded under structure like this, in my opinion, buying pullbacks or whatever is not going to work unless you're just trying to trade back to the resistance here, the old support and your resistance. Like that scalp is okay, but I shouldn't be buying like I do here, hoping for higher prices. Like absolutely. So anyway, what happens after, if anyone's curious, is we do trade back up to the high and go slightly higher here, right? And they get everybody excited, thinking that this is going to the moon. And instead, it puts in some more structure, right? A little structure here. Here, I'll draw it for you in case you don't see it. Look, it's this, right? My little dots that I have, the red and the green dots, the excess dots generally show you where structure forms. So if you just could play the connect the dot game, right? Connect red dots and connect green dots. That's your structure. See what I did there with the, here, I'll bring this down. I'll actually do that. So like that. Green dots to red dots. If you start to see a rectangle there, that is structure. And what's interesting is that structure will then act as resistance. And if you get a sign of aggression to the sell side, that is a short, and it works. Now, when it trades back up, I'm trading this as a mean reversion trade now. So I can, for instance, buy this star and target here. And then if they trade above this one, I can sell it if it comes back with a yellow star. So those are the kind of things we're doing in the room. Now, keep in mind, I've added a lot to this algo. I know it looks really crazy, but the TradeNPerform algo is a lot easier to read. Still a lot of signals, but it's just stars and triangles and then purple and pink bars. It's a lot easier to get a hang of. It's still a lot of learning, right? But the concepts are still the same. If you think about it, you can still use these purple triangles as and the green triangles as structure. These are power bars, little pivot points. And same thing when you trade back into them and get aggression like this, trade out of it. Once you get underneath and get aggression back up, you can trade back into it, right? You just don't want to be expecting higher highs all the time. And then just so you know what the pullback buys look like, you got aggression here followed by aggression here, and it continues, right? That's this, and then it's pretty clear, right? It's like the first one we've seen in a while. Like if mine looks really confusing because there's so many colors, because I've been working on it for months and I just have a lot of symbols I'm looking at. Like this should be relatively simple, like sell, buy, right? Add. Let's see, here's the low. Let me show you. So the low did something similar, right? Star, triangle, up. Like I said, I'm not necessarily buying it, but it's not bearish on this side. And then the wave to the low is here. That's the pivot to the low anyway. This is a higher time frame, so the wave to the low actually starts way up here. But the pivot to the low is there. Come over here, you can see the retests. This one doesn't have a signal. This one does. That tells us to get long. No signal here. Signal, go. Right? So, I mean, you can make it as complicated as you want. And I just like things a little more busy. It's a lot to look at, but I've got opportunities everywhere. I will say I do still look back at this one regularly because it's I can see the structure a little bit easier. But if I'm looking for exact positions of where I want to focus, I'm looking here. It's got a lot more information for me, and it's what I'm used to. So that's what I'm doing. Hope that was helpful. If you want to know more about the TradeNPerform algo, you can either message me at RedBenTrader, or else you can email Simon, the one who built the algo. He is at tradeandperform@gmail.com. That's TRADEN, the letter N, and then perform, PERFORM, at gmail.com. So either of us will be able to help you kind of learn how this works. Simon does run a room where we all trade on it together with this algo during the regular trading hours every day. So hopefully this was helpful. If it was, let me know. And keep trading safe, guys. I will talk to you soon.